morning. It's 5 a.m. in New York City. I'm Matt Miller in for Vonnie Quinn. She is on assignment. Here's what you need to know. Heaviest October layoffs in over 20 years. The dollar drops as the challenger job cuts fuel bets on a December Fed rate cut. And brace for more cancellations and delays. The U.S. will reduce flight capacity by 10% as the government shutdown drags on.
I anticipate there will be additional disruptions. There will be frustration. We are working with the airlines. They're going to work with passengers.
And tariffs and uncertainties. The U.S. Supreme Court signals skepticism over President Trump's powers to impose his mass tariffs.
It would be devastating for our country if we lost that. Devastating.
You can see S&P futures right now unchanged. NASDAQ futures also moving very little. Some red arrows here. The small caps down about 0.2%. For some of the stocks to watch, let's get out to London. Aneeka Gupta is standing by. Kriti?
Good morning, Matt. Maybe some small moves on the index level, but some big ones underneath the hood. I'm going to start off with DoorDash here, down about 9%. I'm having a little bit of meta deja vu because they're talking about increasing their investment, increasing their capex, especially when it comes to their Deliveroo business, which they've just acquired here in the UK. But investors not liking that emphasis that comes on, of course, the research and development. That was weighing on the shares, down by about 9%. Fortinet is our next one, also not having a good day, but seeing heavy volume to the downside. This is that major cybersecurity stock. They're talking about lags when it comes to their services growth offering, and the street really punishing it for it, down almost 10% on that stock. But I do have some good news, Matt. There is one stock that's in the green, Snap. It's back, and they are using AI in a big, big way. A massive $400 million partnership with Perplexity AI, and investors are loving it. Those shares higher by 16%.
I got to say, Kriti, $400 million in this age of multi-billion-dollar AI deals doesn't seem that big. But I guess
for Snapchat, come on.
For Snapchat. All right, later in the hour, we're going to take a closer look on those jobs data with Aneeka Gupta. She joins us from WisdomTree. But first off, the U.S. dollar is weakening to a session low, and Treasuries extended gains after challenger job cuts for October jumped to a 7-month high. Joining us with the latest is Bloomberg's Skylar Montgomery-Koenig. So, Skylar, what do we know about what's driving this?
Yeah, I mean, I think it's totally understandable why you'd have that market reaction. If you have a weaker labor market, you don't have inflation data coming in, you're going to have an expectation of more Fed cuts. I think the issue is we knew that this weak print was coming. So especially for the non-farm payrolls print, the shutdown means that those furloughed employees count as not employed. And particular for the challengers print, if you look buried deep in the text, they say that the biggest reason that you've had this increase in job cuts year to date is because of DOGE. So it was a completely anticipated impact, but it's understandable that you'd have some kind of market reaction to it still.
Yeah, and it's also interesting that challenger job cuts come out at 4 o'clock in the morning. I think many people were surprised by the timing there. What is this likely to do in terms of influence on the Federal Reserve?
Yeah, sure. I think it looks like a dovish bias for sure. I mean, we're having a very much an issue with the idea that there's a lack of data. So you have to kind of grasp onto anything that you can. And this is the one report that's telling you that jobs are very weak. And that was kind of the bias before as well. And so there was more of an emphasis from the FOMC on the labor market side of the report. Or of their mandate than the inflation side. You're also not going to get inflation data likely for October, so there's nothing to balance that. So it does shift dovishly. I think my worry is it's not a clear economic signal, right? If you have cuts because of DOGE, that's not because spending is weak. It's not because the economy generally isn't doing well, which is what you'd think generally comes when you have those job cuts come through. So it could be a false alarm for the Fed, and it could mean that they cut more than necessary and you have an overheating economy into 2026.
All right, Skylar, thanks very much. Bloomberg's Skylar Montgomery-Koenig talking to us about challenger job cuts. Now, it is day 37 of the U.S. government shutdown. Travelers are feeling the pain.
I anticipate there will be additional disruptions. There will be frustration. We are working with the airlines. They're going to work with passengers. But in the end, our sole role is to make sure that we keep this airspace as safe as possible. There is going to be a 10% reduction in capacity at 40 of our locations.
Joining us now is Bloomberg aviation expert who runs our coverage globally for us, Benedict Camel. Benny, what do we know about how much worse this could get? Because 10% is already pretty serious, but I believe it's only for domestic flights, right?
Yeah, for now it's only domestic flights. It's going to happen over time, so don't expect 10% to kick in tomorrow. We'll hear about the routes today, and they're going to do this in a sort of cascading approach. So they're going to start with 4%, then sort of increase over the weekend, and then reach those 10% sometime next week. We heard from Scott Kirby, the United Airlines CEO, in a memo to employees. He said international routes will not be affected because that would really be massively disruptive. You're going to have aircraft and passengers out of position. These are the premium flights, so those will be shielded for now. So we're talking about regional, about sort of domestic mainline flights for now at 40 airports, but we don't know where exactly this will hit and just how severe it will be.
In terms of safety, how confident can we be that air traffic control is going to be fully staffed and fully awake?
I mean, this is a response to that concern, exactly. They're trying to take capacity out of the market because what we've seen is that more of these air traffic controllers are walking off the job. They are now a full week into no paychecks. They did still get some residual pay until the end of last month, but now they are essentially showing up without pay. And that has an effect. So people are staying away from work. You are seeing some sort of bottlenecks building up, and that's why this capacity is being taken out. Airlines and officials like Sean Duffy, who we just heard, the Transport Secretary, they will always say that safety is the overriding principle of the industry. So that's the response really very much to that.
Benny, I wonder how concerned the airlines are because, of course, the more I choose to take the train instead of fly or drive, I'm less likely to come back, right?
Yeah, and this is a real issue. The fourth quarter was supposed to be a strong quarter for the airlines. We had the earnings reports a couple of weeks ago, and one of the big themes was that the momentum that we've seen in the third quarter is continuing into the fourth quarter, sort of what's called the shoulder season now. More people are booking in these sort of back ends of the year, the back end months. They want to catch that final vacation, and right now a lot of people will be having second thoughts on that, and particularly as you head into the busiest travel season of the year. You know, Thanksgiving isn't that far away. That's something that's very much on people's minds. And as you say, once you have that really negative experience with a cancelled flight or with a massive delay, you will be less likely to come back. You might take the car, you might take the train, you might do a shorter trip, a domestic trip somewhere else. We've seen it over here in Europe as well, that people are reconsidering their travel plans because they've just had really bad experiences with cancellations and massive delays.
All right, Benny, thanks so much for joining us. Bloomberg's Benedict Camel there covers global aviation for us in front of the Brandenburg Gate. Over in Washington, D.C., the Supreme Court hears arguments on President Trump's tariffs.
We don't contend that what's being exercised here is the power to tax. It's the power to regulate foreign commerce. These are regulatory tariffs. They are not revenue-raising tariffs. The fact that they raise revenue is only incidental.
I just don't understand this argument. It's not an article. It's a congressional power, not a presidential power to tax. And you want to say tariffs are not taxes, but that's exactly what they are. They're generating money from American citizens, revenue.
President Trump reacted to the hearing on Fox News.
I heard the court case went well today, but I just heard that a little while ago because, as you know, it was just 2 hours ago that they finished up. But I will say this, it would be devastating for our country if we lost that. Devastating.
Joining us now is Bloomberg's Brendan Murray. He covers global trade for Bloomberg News. Brendan, I think it's interesting to hear the government argue that the revenue raised is simply incidental, almost inconsequential. Wouldn't it be a problem if these tariffs were reversed, we had to give the money back and didn't have that revenue?
Yeah, exactly. This was the central issue in the debate that we heard yesterday, whether the president or Congress has the power to tax. And the Inspector General really underwent a grilling, not just from the liberal justices, but also from some of the conservative justices, actually some Trump appointees, Gorsuch, Comey Barrett, and we heard them press the administration on this issue. And there are 9 justices, and and the plaintiffs, the anti-tariff folks who were arguing on the other side of the debate yesterday, they only need to pick off 2 of those conservative justices to get a 5-4 decision in their favor. So I think what we saw was the betting markets steadily declining as the hearing wore on. It went almost 2.5 or 3 hours, and we saw U.S. Retail brands rally on the expectation that they're not going to have to pay these import taxes in the not too distant future. We don't know when the Supreme Court's going to rule. It could take several weeks or months. It could be into the first quarter of next year. So in the meantime, what we're left with is another period of a different kind of uncertainty, not whether tariffs are going to come on to U.S. imports, but rather whether they might and quite possibly could now come off of the U.S. imports.
Brendan, the president said this would be devastating if the court decides against him. He said in the past it would be a life or death situation. Of course, he's derided by many, beloved by others for his sensationalist hyperbole. But wouldn't the government just put tariffs on in a different way if they lose this path?
Yeah, exactly. They have other authorities. This was brought up in the hearing yesterday as well. This 232 and 301, the national security and trade unfairness authorities that he can deploy. Remember, they have a 232 case pending on pharmaceuticals and also on semiconductors, and they can broaden those kinds of tariffs out to hit a lot of different kinds of products. So there are other tools at the president's disposal.
Brendan, thanks very much. Brendan Murray there, our global trade czar out of London. Now let's get to the other top stories trending on the terminal this morning. JP Morgan Chase CEO Jamie Dimon says headcount at the bank will probably remain steady or even rise despite AI. Speaking to CNN, Dimon said, quote, always redeploy, and that AI will reduce workloads in many roles and create jobs in others. Global bond sales have soared to a record this year as borrowers take advantage of easy market conditions. Sales have been dominated by financial institutions and increased issuance from governments to fund burgeoning budget deficits. Total investor returns for the year sit at more than 7%. That's the best in 5 years for credit. Bloomberg has learned that SoftBank explored a potential takeover of U.S. chip firm Marvell earlier this year. The move would have marked the chips sector's biggest ever deal. Sources say the talks have since stalled. Marvell shares surged over 11% in pre-market trading here in New York. Coming up, Jensen Huang's warning for the U.S. China will win the AI race. More on that coming up next. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York City. NVIDIA's CEO with a wake-up call for Washington. Speaking to the Financial Times, Jensen Huang said that China will win in the artificial intelligence race thanks to lower energy costs and looser regulations. Joining us with the latest is Bloomberg Intelligence senior analyst Matt Bloxham. And Matt, I thought this was pretty fascinating. I mean, there's sincerely severe statements saying that China is going to beat the U.S. because it doesn't regulate AI and it gives away power for free. How seriously should we take this statement?
I mean, I think there are clearly some very serious and important issues that he's raising. I mean, clearly the U.S. government has a whole bunch of factors to kind of weigh up. You know, clearly NVIDIA really just, wants to kind of sell more chips and justify that $5 trillion valuation. But, there are definitely a lot of issues around energy supply in the US. There's been a lot of issues around the restrictions around copyright to train the models. And I think, those things are clearly issues that China takes a different view on. So I think these are legitimate concerns. Obviously, there's a huge amount of sensitivity about how quickly you make the technology available to China, from a kind of military perspective. So, I think clearly that the government in the US, I'm sure, and President Trump will be open to understanding these. They do want to kind of create an open environment for the AI industry to thrive in the US, but there clearly are a broader set of issues for them to balance and not just the interests of NVIDIA.
You know, we've heard just last week on Wall Street Week, David Weston's program on Friday evening, we heard from one of the inventors of AI that there's not an insignificant chance this technology does real damage to humanity. Does Jensen Huang have any concerns at all about the potential negative power of the technology?
I'm sure he does. I mean, I wouldn't want to kind of, speak for him. I guess, ultimately he is running a publicly listed company, and his priority is to his shareholders and to kind of grow that business as much as he can and deliver as much profit. And, it's up to government and society to kind of put guardrails around, what is appropriate. And obviously we have seen similar issues with the whole way that the kind of social media industry has played out, and the kind of significant rise in kind of mental health issues amongst young people, and obviously probably a whole bunch of factors, but clearly social media is kind of connected with that. So probably he does have concerns as a human being about these things, but ultimately he's running a company that is there for his shareholders.
Right. I mean, we've seen how bad social media is for society, and Jeffrey Hinton is the godfather of AI on Wall Street Week, who said there's a 20% chance that AI could lead to human extinction in the next 20 years. Elon Musk has made similar comments, as have others. Nonetheless, regulations are coming on slowly but surely in the U.S. Are there no regulations in China? Are the Chinese not worried about this either?
I mean, they have regulations, but I think, I think they clearly have a kind of very different philosophy on many things. And I think, that they see themselves as catching up to the US, both from an economic and military power perspective on this. And so their priorities right now are a bit different. And it's like, kind of encouraging a kind of fledgling industry there to kind of close that gap.
All right. Matt Bloxham of Bloomberg Intelligence, normally looking at the numbers, I thought we'd just take a bigger picture view of what's the future of AI. Thanks so much for joining us this morning. Coming up, we're going to bring you our exclusive conversation with the head of the MSCI Sustainability Institute next. Linda-Eling Lee joins us. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York. Over in Brazil, our Vonnie Quinn spoke exclusively with Linda-Eling Lee, head of the MSCI Sustainability Institute at COP30, the climate conference. Take a listen.
Well, I think we've actually seen tremendous progress in decarbonization in companies since the Paris Agreement. I know there's a lot of talk about missing this 1.5 degree target, but the truth is that, over the past decade, especially the companies in developed markets have actually substantially reduced their emissions by 18%, actually, even as their revenues have really increased. It's really, at this point, the emerging market companies that have continued to increase. They grow much more quickly in terms of revenues because of their economies, and their energy needs are much higher. And so they are now very much the major contributor in terms of listed companies' contribution to global emissions.
And we're talking about China and India mainly, right?
We're talking about China, India, Indonesia, all the big emerging market economies.
Is there an effort in those markets to try and slow the emissions, output?
I believe so. I think that the technologies are there, and I think that these companies and the investors that are focused on these countries and these companies will continue to make headways. And I think that we're going to start to see some bending of the curve, if you will.
How much is it a concern for investors that the curve continues to bend? I know there was a big effort for some time. Now we're starting to see stories trickle in that perhaps it's not so much of a priority.
Well, we definitely continue to see climate capital increase. I mean, even through the beginning of this year, publicly listed climate-themed funds have actually increased by 12%. And if you look at the funds that are tracking MSCI's climate and sustainability indexes, they've continued to grow and now surpass $1 trillion. So we do see capital continuing to flow really towards companies that are better performing in terms of their transition plans and their decarbonization.
And that was Linda-Eling Lee of MSCI speaking with our own Vonnie Quinn. Time now for your front page news. First up on the New York Times, lawmakers are seeking an investigation of judges who criticized the Supreme Court. Republican leaders of the Judiciary Committees of both the House and the Senate sent a letter to Chief Justice John Roberts saying judges who responded to a Times questionnaire may have violated ethics rules. The Times published a story on federal judges accusing the High Court of mishandling its emergency docket. Next up on the Wall Street Journal, President Donald Trump expresses reservations to his top aides over the strikes in Venezuela to oust President Nicolas Maduro. According to sources, Trump fears the strikes might not compel the autocrat to step down. And in the Financial Times, Argentine President Javier Milei defies investor calls to allow the peso to float freely. This follows his victory in the midterm election. Speaking to the FT, he said he'll accelerate his free market reforms and deepen his ties with President Trump. Coming up, feeling the impact of AI. We'll speak with Aneeka Gupta of WisdomTree on the labor market next. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Matt Miller with your Bloomberg Brief. Vonnie Quinn is on assignment. Here's what you need to know. The heaviest October layoffs in over 20 years. The dollar drops as the challenger jobs data fuels bets on a December Fed cut. And brace for more cancellations and delays. The U.S. will reduce flight capacity by 10% as the government shutdown drags on.
I anticipate there will be additional disruptions. There will be frustration. We are working with the airlines. They're going to work with passengers.
And tariff uncertainties. The U.S. Supreme Court signals skepticism over President Trump's powers to impose his mass tariffs.
It would be devastating for our country if we lost that. Devastating.
To be clear, using IEEPA, he's done tariffs in other ways, which no one has a problem with yet. In terms of the market right now, we're looking at some slight gains. We had a rebound yesterday and closed in the green. The NASDAQ also now looking at about almost a one-tenth of 1% gain. Russell futures down, but just marginally. For some of the individual stocks to watch, let's get out to London. Kriti Gupta is standing by. Kriti?
Morning, Matt. Calm on the surface, plenty of action underneath. I'm going to kick it off with DoorDash here, down about 8% this morning after they're talking about spending in a very, very big way. This is what the market punished Meta on last week about really making these big investment CapEx promises. They're trying to really revamp Deliveroo, their UK acquisition here, and the market is not loving it. Those shares down about almost 9% now as we speak. I want to stick with the tech theme if we can. Talk about Qualcomm here because this is a stock that, of course, reported earnings after the bell yesterday. Great earnings. They came out with good numbers. They came out with good sales numbers, a good forecast. It still wasn't enough for this market. Massive expectations. The A++ student delivers an A+, and the market doesn't love it. Shares down a little over 3%. What the market does love, though, is any company promising to use AI. That theme's still very much in play, especially for the likes of Snap. Those shares higher by almost 18%, a $400 million deal with Perplexity AI.
All right, Kriti, thanks very much. Kriti Gupta there with some of your individual movers. Now let's get to the macro data that's moving the market. Challenger announcing U.S. companies had the most job cuts for any October in more than 2 decades as AI reshapes industries. Joining us now to break down the numbers is Bloomberg's Michael McKee. And I guess it's kind of weird saying it's the most for any October. I mean, maybe we just didn't have big job cuts in October over the last
we
2
didn't,
decades.
and that's one of the things that Challenger points out, that normally you don't want to announce job cuts in the fourth quarter because that's the holiday period and everybody's unhappy when that happens. Normally out at 7:30, Challenger released these early because why not start everybody's day off in a bad mood here? 153,074 job cuts announced for October, the highest since 2003 for the month, and it's a 183% increase from September, 175% over the last year. For 2025, we're up 65% in terms of job cuts over 2024. It's the most year-to-date cuts since COVID in 2020, which of course screws up all the graphs. But the monthly cuts are extremely high, and AI is one of the main reasons, particularly this year, that and Doge, according to the Challenger Gray and Christmas people. But there are some caveats, Matt, that we have to mention, and it's why Challenger doesn't get a lot of use by economists, and that's because they're compiled from companies' announced plans. They don't always follow through on all of that, and some of it comes from attrition as opposed to actually cutting the jobs. It can also take many months before any of these job cuts are realized. Amazon, with its big announcement, gave people 90 days notice, so it's going to be a while there. These are also worldwide, not just in the U.S. It's not just Americans who are losing their jobs or not getting new ones, but it is an unfortunate number that will catch people's attention at the Fed. Also, bad news, they're saying that seasonal hiring announced plans are the lowest since they began tracking them in 2012.
Wow. The thing is, remember yesterday, Scott Bessent, who is the Treasury Secretary, posted on Twitter, jobs are booming and inflation is falling. Now, we know that inflation isn't falling because we did get data on that, but are jobs not booming?
There's no indication that they are booming. We've got a number of alternative data sets. The ADP number came in at 42,000, which is very, very low compared to what we've been getting, maybe just on the cusp of neutral for the unemployment rate. We saw negative numbers from the ISM in terms of services and manufacturing. We've read regional feds report low hiring, and now you get something like this. And the picture is we're not hiring anybody at this point. The question is, are we losing jobs? And that's the part of the data we don't have.
It's so interesting because the labor pool must have shrunk, right? We're deporting, I mean, at least hundreds of thousands of people. I guess the goal is millions of people. We're not letting anybody else in. So wouldn't there be some scarcity there in terms of the labor supply, and employers would jostle for?
Well, ordinarily there would be, and you'd see wages rising as employers competed for workers. But in this case, what seems to be happening is either a combination of AI, softening economy, or whatever. The companies are not hiring. They haven't been, to this point, letting people go. They've just been using the workforce that they have. And so even though the labor force has shrunk, the unemployment rate hasn't gone up because the denominator is lower. But at this point, maybe we're starting to see things change. That's the argument that, say, a Chris Waller would be making at the Fed.
We're at 4.3% right now, which is, in our
Historically
lifetimes,
low, yeah.
very low. All right, Mike, thanks for setting us up. Michael McKee, their international politics and policy correspondent, economics and policy correspondent. Joining us now is Aneeka Gupta, director of macroeconomic research at WisdomTree. And Aneeka, as Mike points out, and as we've heard from a number of I've been talking to private equity MDs, and they have been saying, look, in our portfolio companies, we're able to replace a number of jobs with AI. Is that really happening?
Well, I think AI clearly improves efficiency for companies, and companies are clearly adopting AI across their workforce. We still do expect to see a little bit more weakness coming in on the labor market front. And obviously, given the data lull, the way we're trying to estimate, the incoming numbers for the U.S. labor market is we're basically looking at trying to forecast payrolls using three indicators that, have been proving their worth over the last 3 years. So first and foremost, looking at the hiring intentions of the NFIB small business surveys, they advanced by 4 months. Second of all, just looking at the employment intention indices of the regional Fed business surveys, those advanced by 2 months. And then the job availability differential in the Conference Board surveys of consumers. So those indicators are essentially pointing to a first estimate about 75K increase in private payrolls for the month of October. Now, we would underpin a near zero non-farm print on the basis of that, given the fact that we've got about 100K workers dropped off the federal payroll at the end of September after reaching that end of 6-month deferred resignation scheme. So, that clearly points to the fact that even though we are in a data lull, it is quite clear that the expectation for the incoming number is going to be weak. And that would just pave the way for the Fed to go ahead with another rate cut in the month of December.
What about, Aneeka, the inflation part of this equation? I mean, as I was telling Mike, we got a tweet yesterday from Scott Bessent saying jobs are booming. I guess we don't necessarily believe that right now. He also said inflation is falling, but CPI was still above 3%. So is that happening? Are we seeing inflation coming down, or is it more likely to go the other direction?
Well, I think we've had a few starts and stops on the trade negotiations. The reality of the matter is the U.S. consumer is going to now be faced with an effective tariff rate going from close to about 4%, now jumping to about 18%. And given the start and stop on the trade negotiations, we're now seeing it averaging around close to about 8 to 12%. And owing to which we aren't seeing the full impact actually pass through into the inflation numbers. We're likely to see that happen gradually. So for now, what is having a bigger impact on, the outlook is really the dampening effect from the weaker growth. And obviously the weakening of the labor market. I think over time, we will see that full impact coming through from the higher tariff rates, which will impact the consumer, and hence the inflation numbers should hover a bit higher.
How do you view the agreement between the U.S. and China? How are the relations there? And how likely is it that we get these rare earth minerals that we desperately need for our manufacturing sector, and that they buy soybeans? I guess those are the two main issues, right?
Right. Yes. I mean, it was quite clear that, now that we've got that 1-year extension between on the U.S.-China trade truce, both sides were willing to try to reduce their dependence on one another. So, that has eased those tensions between the U.S. and China, and it's allowed and paved the way for a bit more clarity in the markets. Now, given the fact that China is still dependent on the U.S. for technology exports, it is likely to allow those exports to come through of those rare earths, which the U.S. is extremely dependent on. But what we are seeing play out in the background is the West, and in particular the U.S., is trying to, widen and reshore these supply chains when they're tied to strategic metals and rare earths. And in lockstep, we've seen the miners of strategic metals and rare earths, start to really appreciate in price and in performance. So we're seeing a lot of public-private collaborations with companies such as MP Materials and Apple to build these domestic magnet supply chains. We've also seen the Department of Defense take some strategic stakes in some of these rare earth miners. And this is all, while it is buying a bit of time until the U.S. is able to actually reduce its dependence, for now, it is very clear. I mean, the China holds that strategic upper hand when it comes to those trade negotiations. And in lockstep, we are seeing the miners of these strategic metals and rare earths really benefit from this build up and reshoring of supply chains that the West is trying to promote.
All right, Aneeka, thanks so much. Really appreciate you getting up early, joining us well, maybe you get up this early all the time, but joining us this early to kick off your day. Aneeka Gupta there of WisdomTree. Now let's get to some other top stories trending on the terminal this morning. JP Morgan Chase CEO Jamie Dimon says headcount at his bank will probably remain steady or even rise despite AI. Speaking to CNN, Dimon said JP Morgan always redeploys, and that AI will reduce workloads in many roles, but create jobs in others. Watches of Switzerland shares jumping as much as 8.2% this morning, climbing to a 4-month high. This comes after the watch retailer delivered better top-line growth than anticipated in the first half, thanks to strong performance right here in the United States. And Bloomberg has learned that SoftBank explored a potential takeover of U.S. chipmaker Marvell earlier this year. The move would have marked the chip sector's biggest ever deal. Sources say the talks have since stalled. Marvell shares, though, still surging over 11% in the pre-market this morning here in New York. Coming up, the government shutdown may upend your travel plans even further. More from the Transportation Department next. This is Bloomberg.
contend that what's being exercised here is the power to tax. It's the power to regulate foreign commerce. These are regulatory tariffs. They are not revenue-raising tariffs. The fact that they raise revenue is only incidental.
I just don't understand this argument. It's not an article. It's a congressional power, not a presidential power to tax. And you want to say tariffs are not taxes, but that's exactly what they are. They're generating money from American citizens, revenue.
I heard the court case went well today, but I just heard that a little while ago because, as you know, it was just 2 hours ago that they finished up. But I will say this, it would be devastating for our country if we lost that. Devastating.
President Trump's tariffs faced the biggest test at the Supreme Court yet as the administration confronted some skepticism over the IEEPA powers with which he put some of them on. Joining us now from Washington is Aneeka Gupta of Bloomberg Government, and it is the IEEPA portion of this that's in question, right? Not the tariffs. The government's been clear it could do tariffs in other ways. But is it fair for the president to use emergency powers to do something that maybe Congress is responsible for?
Yes, exactly, Matt. I mean, that's the central key question here in this Supreme Court case. I know that members of Congress have also been eager and vocal about them saying that they need to be able to have a say in terms of when the president can use these as an emergency power. But it seems like right now the court is very skeptical about that use, and if it remains so, this could be a huge blow to the administration as it faces other domestic issues in the middle of an ongoing government shutdown and other issues, especially if the economy takes a downturn here with the impact of that. But it looks like we're not going to see a decision until maybe spring of next year. So we'll have to keep an eye on things.
He has been shot down on IEEPA before. In his first term, President Trump tried to ban TikTok using IEEPA. That was before he flip-flopped and decided that he was in love with TikTok. Is there any past precedent from which the Supreme Court is likely to draw?
I think it's possible, but I also think that this administration is one where, President Trump is unafraid to try and use his authority in ways that are unprecedented at times and do skirt against normal, normal procedures that previous presidents have used. And I think that's one thing his critics might say about him, but also fans of the president to say that he should use his authority as much as he can. So I think there's a possibility that this could be drawn from other past precedent, but I think every case is unique in its own way as well.
I got to ask about the flights. The Republicans clearly have given the Democrats a clean CR. They won't sign that, so the government remains closed. Or they won't vote on it, so the government remains closed. Now we're going to be reducing capacity. How far is this likely to go?
I think that both the Trump administration and Republicans are trying to pressure Democrats as much as possible. I think the flights cancellation up to 10% of domestic flights, that could be detrimental both on the U.S. economy, especially ahead of the holiday season where many people are getting ready to fly for Thanksgiving and Christmas, as long as we don't know how long this is going to last. But I know that FAA Administrator Sean Duffy has said that, they could have more pressure going on as far as we know. So starting Friday, that this is going to have a severe impact. And we also know that air traffic controllers have been under heavy pressure, about to miss their second paycheck. And there's been strong delays at airports across the country.
All right, Aneeka, thanks very much. Aneeka Gupta there of Bloomberg Government talking to us about some of the news out of Washington this morning. Let's turn to tech. Google ramping up its AI push with AI data center plans on Australia's Christmas Island. And Business Insider reporting the company's in early talks to deepen investment in Anthropic. So Matt Bloxham joins us again to talk more about this push. I guess these big hyperscalers are going anywhere they can to get capacity, right?
Yeah, that's right. And, you can't just completely concentrate everything in the US. You need to kind of have a kind of regional diversity of where your data center capability is, so you can serve your customers in region appropriately. And in some cases, you need to be in region for regulatory reasons too. So, yeah, I mean, it's a race to get as much capacity as you can.
Where are we seeing which companies need the most and aren't doing enough? Mark Zuckerberg famously said it's okay if they overspend by a couple of $100 billion when they look back later, as long as they don't underspend. That's the bigger risk.
Yeah, I mean, I think if you look at the kind of the near-term real demand for services, it's Microsoft is the company that has the kind of biggest challenge. They're growing their cloud business really well. That Azure business was kind of up in the mid 30% growth the recent quarter, but they can't deliver as much capacity as they need to meet that demand as quickly as possible. So, that's kind of probably where the biggest near-term commercial challenge is. For the likes of OpenAI and for Meta, it's a bit more of a kind of strategic mid-term issue. And if they miss by a quarter or two, it's not going to really matter, because ultimately a lot of the capacity and demand they're building for just isn't there right now.
So many people asking, and have been for years, when Siri is going to get a little bit smarter. Apple doesn't seem to be investing much in that itself that we can see. But will it look smart in the end? Not spending so much CapEx and then just using somebody else's?
Yeah, I think they potentially could, and they've kind of followed this path before on a range of different technologies. They're kind of very clever at understanding where it makes sense to invest and what their strengths are and what they really stand for. So this kind of deal that they're developing with Google to use a 1.2 trillion parameter model to power Siri, that's a massive upgrade from the, I think it's $150 billion parameter they've got right now, will really kind of change Siri. And I think, it could ultimately be a masterstroke for them in terms of balancing that investment risk and kind of putting their capital and intellect to work where it really makes most sense for them as a business.
All right, Matt, great to get some more time with you this morning. Bloomberg Intelligence senior analyst Matt Bloxham talking to us about the most important industry in the world right now, which is tech. Coming up, we're going to get you set up for your trading day with a rate decision from the BOE. That's the Bank of England, and more earnings out of the U.S. This is Bloomberg. Let's take a look now at what's ahead today. The BOE announces its rate decision at 7 a.m. Eastern, plus a host of Fed speak coming from Williams, Barr, Hammock, and Waller, plus more throughout the day. And earnings from Warner Brothers and Hyatt before the bell, Airbnb coming after the market close. In terms of what we're watching, you're set up for this morning. You can see S&P futures right now up only 0.1%. The U.S. dollar falling on those challenger numbers, and the 10-year yield at 4.13, 4.14. That's it for Bloomberg Brief. Surveillance is up next.